So you guys said we should look at the JP225, and then we come and look at a JPY pair. Then after I'll look at USD CHF. Okay, like what exactly am I expecting? Where do I think the market should go before we can consider, you know, changing our maybe our sentiment? So let me clean this up. Fuck. Clean this up. Should I really clean it? No, I don't. But basically, you guys can see that I used this range to generate all these other, you know, monthly levels. So, what levels are we interested in looking at? So right now, the market is ranging here. The market has been trading here for the last few months. This is where exactly the market has been trading. So what is kill short? Kill short is a trading strategy, but kill short, just like its name, it's supposed to give you advanced entry levels. Like your entry should look rare. That is why we have it as kill short. Kill short is just, I think, another word that someone could probably use for a sniper. So sniper strategy or kill short, whatever, like strategy. And kill short doesn't really require anything that is too much special. The same way you're going to have your technical analysis, the normal analysis is what you're always going to do with kill short. You're going to analyze the market. You're going to know that, okay, my sentiment is bullish onto this pair and blah, 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 and all this other stuff. Now, when you come to kill short, you're basically going to use that same analysis to have a very sharp entry. The purpose of having a kill short entry is so that you don't go into so much of a drawdown. I hope you're together. I've actually muted everyone. So first things first, this is bullish. This is a bullish thing on the monthly, but I'm trying to focus so much on the last few months. And then on the last few months, I can see that price came and touched the 16,000 level, which was a very strong monthly level. Came and broke the weekly level and retested it. And then it also came and broke another monthly level. The fact that this thing is breaking a weekly level and going ahead and also breaking a monthly level, to me, I'm looking at this pair going and touching the next monthly key level. That's what I'm looking at. But since this is a monthly time frame, you could have had very good opportunities for the market correction, because within this monthly range, there's a weekly level somewhere in the middle here, which you guys already know how to do. So that is my first direction. I'm looking for market to drop, to go up to this level before we maybe think of dropping to another monthly level. So that is what I want. So all my analysis will be built basing on taking buys on the JP225. That is one. Now, if I try to relate this whole thing to a technical bit of it, as the coronavirus is now settling, we have to first understand that JP225 and the JPY currency itself, Japan has a zero interest rate. So during pandemics and panics, most investors don't want to lose interest into their money. That's why you basically see when maybe the US drops their interest rate, people are going to move their money and take it somewhere where they want to be fixed. Like during this time, if you keep your money with the JOP, the Japanese bank, so you're going to have no interest. If you put $1 million, your money is going to remain $1 million. It's not going to depreciate. That's why it's called safe haven, because the interest rate is always stuck at zero. And now that the coronavirus is settling and cases are reducing, and maybe the panics are reducing, people are back into the risk mode. People are coming back into the risk mode. People want to make money out of their money. They want to make more money. So what does that mean? It technically means people are going to be moving their money away from Japan, and they want to invest their money somewhere else. So if you relate that, then that will definitely help you understand that you still have a chance of selling this JP225. You have a chance of selling. Now, if that is the case, where do we get the sell entries or the buy entries? The sell technically will not be a lasting sell, but the buy to me is still so much value. So what am I looking at? I'm looking for buys on JP225 and JPYs. That's what I'm looking at. I'm looking for buys. Though we have that, you know, we have that, but technically I'm still looking for more buys. At least I'm looking at price touching this area. That is how I look at this pair on the monthly. So as I move to the weekly time frame, I'm going to be having lots of other things to consider. And as you guys can see on the weekly, price from here to here, then we came here, and then we have this. Okay. Now it's important to understand that on the weekly level, once we divide it into two, we're going to have, these monthly levels, once we divide it into two, we're going to have a weekly level. Okay. So I'm going to clone this and I'm going to move it. So I want to get a weekly level here. So 24,000 plus 22,000 divide by 2, 23,000. So my weekly level will be 24,000 plus 20,000 should be 22,000. So this is a level that I'm supposed to be considering already. Okay, so how do I do now? Kill short. Now that I'm bullish, my personal sentiment is now still bullish on this this pair. Technically, okay, technically I'm bullish on this pair. So I'm going to be coming and now focusing on the last 2 or 3 candlesticks right from the weekly. And this has not yet answered someone who wishes to understand more about kill short. Kill short is a strategy that respects the wicks, and the wicks are actually this kind of things. This is a wick, this is a wick, this is a wick, this is a wick. And this wick should be happening at psychological prices or FIP levels and anything to do with an important price zone. So once you see price action around those levels or around those wicks, that zone where price is wicking becomes becomes a kill short zone. So let's see, how are we going to apply like kill short, like here now? How are we going to apply kill short? Technically, I'm now saying I want this pair I expect this pair to move up, to come down, probably, and then go back up. I want this pair to come and test this level at least before I can think of selling it, before I can probably think of bringing it down to the next monthly level. So now your question is really so hard to answer. It's like I'm supposed to teach you this whole kill shot. I think that's technically what it means, like teach us kill shot. So with the kill shot, now that I'm bullish on this pair, I'm going to be looking at the last 2 weeks. I already know that this is a weekly level, but me, what I'm focusing on is trying to look at the last 2 or 3 candlesticks, and I look at the body, the close, the open, the close, the wick, the close, the open, and everything of that kind. And then I'm going to be marking those levels. So I'm marking this wick. I'm marking this wick. And I'm marking this wick. Since now this 22,000 is close to the body, I'm considering this line to be the line there. And then I'm going to mark this. I'm going to mark this body. Yes. That is basically the first thing you do with kill shot. Whether you've looked at the last 2 or 3 candlesticks, and then you have their wicks and the bodies and wherever you could see, you try to mark them, and these are the levels where you're going to enter from. These are the levels where you're going to enter from. As simple as that. So basically now, I'll be adjusting this because I know it has to come somewhere down in the middle before it can, it can go back up. Do you guys see that? That is what I have for me. So now, after marking these levels with these horizontal lines, you have to round them off. That is the second step. Round them off. If a level is on a support, like this is a support level, support, you round it off to the next higher number because you expect to buy. If the level is for a resistance, you round off to the next lower number. So this is this. So this is going to be 700. Not so. Then this is going to be 800. Like very simple stuff, guys. Very simple stuff. 800. Then this one, I round it off to the lower numbers. 250, And this one I round off 170. Just a round price. That is the second step of doing my kill shot. Now, the next step is that if the distance between these two, like this one, is so close, this and this, if the distance between them is so close, it technically means that will be considered as a zone. That will be considered as a zone, and that zone, you're going to come and edit it in correspondence to the line that you had. So there we had 21,800. This we have 21,700. This is what we call a kill shot zone. This is what we call a kill shot zone. Now, I will remove this horizontal line since it's lying within that zone. I don't know whether this is making sense, but I hope it really is. Then here also the gap is really small, so I definitely drop a zone. And I do the same, 250, okay? And then 170. Not so. I remove these lines. This is what I have, guys. This is what I have. Okay, let me try to This is what I have. But what if price decides to break below this zone? What if price decides to say, okay, I'm going to break this zone and boom. What next do I consider? What next do I consider? You basically know when you divide this and this, you have a daily level somewhere. And you look at these wicks now on the tail, and you probably have a kill shot level you can take. That's why I'm saying a trade will always be given two chances. If this doesn't work out, if this buy doesn't work out, you wait for another level for price to come to, maybe here or maybe here, and you take the buy. If you're so stuck and if you're an intraday trader, it's okay. You can still take advantage of this sell and sell it to maybe this support. But if you're a swing trader, you're going to be seated with your buy limit here and waiting for it to be triggered so that you can buy. So that is one thing you do. So we have done this on the weekly, and now what we need to know is this is going to be our this is going to be our, I think, kill shot. That's our kill shot zone. I don't know, you could put it anywhere, but that is it. That is your kill shot zone. It's not really important to have it there, but that is how we get our kill shot zone. Now, once you're done on the weekly, remember I tell you, the smaller the time frame, the sharper the entry. You're going to start going to a lower time frame, like in this case, it's the daily. You're going to start seeing, okay, why is price, how is price reacting onto these levels? Why is price reacting here? Now, you technically even know the reason for this sell. You know that this sell was not just a FIP level on the weekly that you marked, but also this entire zone was a daily key level. Do you see that? It just appeared on my daily. But then I agreed that my daily key level would be pink, would be gray. That was my daily key level. That is why you see price is actually, that's why price first decided to sell from there until the weekly key level. So now that we're looking for a buy, we're trying to go to a lower time frame and see how price is reacting around this Fibonacci level. And when you can see that, you can see that we have a wick here, we have a wick here. This zone even is valid on the daily. So you can as well go to H4 and look at how price is reacting. So now what am I expected of? All you have to do now is you're supposed to wait for price to come down here. You're waiting for price to come down here and then probably take off. You know, this is what you're waiting for, something of that kind. Then boom. If someone hasn't understood this, then I don't know how I would really have to help you. But I think this is the best way I would pull this. Now, when considering your entry levels, you basically should be able to understand that anywhere within this zone, as long as price comes and touches it, take that trade. Your stop loss will just be below this wicks. So if I have a buy setup here, I would be having something like this. I have a long position and I'm waiting for price to come and touch here. My stop loss It's just below this wick, and my target level is up there. That is the kind of trade I would really be taking. And then this is another option. This is one. If someone is doubting this, then you can still use the Fibonacci from this low to this high to see where price would drop to. You see that? That is if you really want to enter the trade. If you see price drop to 61.8 and you're seeing price action for a buy, and you know that this is a weekly key level, it's okay, you can still buy from here. But this one will mean the setup is taking more risk because still your stop loss will be down here. So that's what I'm looking at. I'm waiting for price to drop between 21,750 and 21,650. And then I take that buy. That's what I'm looking at. If this fails, then I'm going to wait for a clear break onto this level. If this is broken, I know my stop loss will be hit. Okay? I'll accept that stop loss, then I'll wait for a retest and change my mind and take a short trade. That's why I say every trade is given 2 chances, because you can't really be as rigid as you wish, because the market is not really your relative. It's not really going to follow what you want like every time. So after I've analyzed this now, I think it's even easier for me now to go to a JPY pair. It's easier for me to go to a JPY pair, and then I look at whether I have a JPY pair, which is also coming, floating from from any key level. Okay? From any key level. Let me remove this. So let me look at GBP JPY. You probably will see that GBP JPY is giving you a similar type of setup. Price has been dropping. Price broke this range. We broke this range. Okay? We broke this range, and now price looks like it had come back for a retest. So now what do you have to do with your kill short in this case on the daily? Let me look at this on the weekly. So this is the weekly key level. So I probably might mark this week, like boom. I put a round price, 134. Okay, that's the round price. And I have a buy limit at 134, because when I come to my daily, price has already rejected this 134. It's a round price. And when I go to H4, you're probably going to see that I have a fast bus, and actually I have a double tweezer bottom. And price is coming, and it actually almost started already for the second bus. I don't know whether you guys see that. 1, 2. So this trade to me is still valid. I can take this trade from anywhere, the buy, and I have my stop loss down here. But for formality, for good risk reward, I can still wait for this trade to come back here again. I have my buy limit here. So this is a signal. I'm going to give you a signal. A buy limit on GBP JPY at 134.00. Stop loss is 40 pips. Stop loss is 40 pips. So it's going to be 133.6, your stop loss. Now, where is your take profit onto this setup? Your take profit here is going to be the monthly key level. So 134 to 140, I don't know how many pips that is, but that is over 1,000 pips. Is it? No. So this is going to be, let me just put it here. And my entry level is going to be 134. My stop loss is going to be 40 pips. And my take profit is going to be 140. So my take profit is 600 pips. My risk reward for this trade is 1 to 15. So this is the kind of setup I would basically wait. All I'm waiting for is price to come back here at this level. Go back up there. So that is for GBPs, and that's how I'm looking at this whole thing personally. I'm not counting canceling out that we could still break this level and retest. If this level is broken, if this stop loss is hit, and I see price action for a strong sell, I will admit and accept that this level, this weekly level, is the one which had been broken and retested. Because you guys can basically see this. You can say this level was broken and probably looks like a retest maybe on the weekly. Though I'm thinking this is a fake out, so we have to go back up. Okay? Are we together? Yeah. So this is a GBP, JPY, and that is the analysis. I've given you a signal on GBP, JPY. And if you wish to apply levels and hide it on top of your kill shot, you can put 134, 134.5, 134.5, 135.5, all those, you can put those levels. And if this first level is triggered at 134, the rest of the upper levels will be buy stops, buy stops, buy stops, buy stops. So once we reach 136 and it gets triggered at 137, let it be your last buy trade. So 137, all you have like these other levels down with trades, and then you go with it all the way up. So that is that. If you don't have any questions, then it's okay. But if you have a question, don't text. I mean, don't unmute yourself. Just type it, and then I'll look through it from here, and then I answer you as I go for USD CHF.
Oh, by the way, these breed exit is coming up too as a fundamental.
Okay,
so it affects certain things. Bread exit coming up.
Oh, let's look at that. Yeah, so these are some of the things you really have to look at. The fact that GBP, JPY is at a key level. We always need some fundamentals to break some levels. You guys understand that, okay? Some levels cannot just be broken with technicals. We need fundamentals to break them. So Wednesday, where is it? GBP. Okay, we have 10 minutes. GBP. And we have GBP news on Thursday. Thursday, official bank rate. This is going to be terrible. So, okay, these are some of the technicals that will, the fundamentals that you really have to consider, even if you're doing your your technical analysis. Though the technical bit of it still remains as I've given you. But I'm really thinking with that interest rate, it's really going to push this price back up. That's my own technical look of this whole thing. I'm going to look at USD CHF chap, and then you guys can.
Patrick.
Yes.
When you go back to the GBP JPY, doesn't that candle look like a second burst to you?
Yeah.
Because when I look at
it looks like a second burst to me. Technically, it's a second burst.
Then why would we set a buy limit waiting for it to come down again?
For me, I wouldn't mind someone actually buying it from here. But as long as you buy, make sure your risk management can handle a drawdown of this size, okay? But for me, okay. I'm a weird trader, so I would still give it a chance so that it comes down here. Because I'm going to enter to kill. I'm not going to enter with 0.1. But yeah, if I decide I'm going to enter from here,
Hi, Patrick.
The candle, I'm basically going to, I'm going to try to manage my risk because I know that I should give the market this space to, to come down if it decides to. So if someone's going to take it directly, it's okay. You can take that trade and then you watch how it's going to be. When you take trades, try to hold trades for at least 3 days, guys. Don't take trades and be babysitting that MT4. That's why I use a lot of pending orders because, they will go and take my trades and then they come. Take my trades and then they come. Like
another quick one.
Yes.
When you look at the fundamentals, how do you even predict that this is going to be terrible? It's going to push the car pair down or up?
The fundamentals, when you look at them, they always have a focus. Okay? They always have a focus. And this focus is like 70% accurate always. So assuming, let's say for the GBP, let's say for this USD, which is going to be on Tuesday, retail sales. Since we're looking at a very positive focus here, okay, you can come and look at where USD pairs are, for instance, and since you see that, okay, this Euro USD is on maybe this support, you probably know that since you expect a positive focus on the dollar, it might be that news that will break actually this level and retest, so that you can continue selling this that pair. So you technically, somehow you're going to see that when you're expecting a fundamental coming up, and then you have a pair that you want to trade, you're going to find in most cases that this pair is either at a very critical level where it has to reject, or it has probably somehow broken it and it has to have a positive break, like to continue the real breakthrough, like it really has to move and break it and make it clear to people that, okay, you've already broken this level. So basically, that's what I look at. I look at the fundamentals. If it's on GBP, then I'm going to start looking at what level is now the GBP pair itself. Is GBP on a support level, or is GBP on a resistance level? So now that GBP to me is looking like, okay, fine. Technically, I'm looking like GBP is onto this support, this support zone. Since GBP is here, I probably expect that, okay, it's okay for this news to have a positive, to have a positive focus, like to have a positive result, so that it can actually help push this GBP up. Technicals always somehow move along with your fundamentals if you do them right. Okay? I don't know whether that has actually answered you.
Yeah, it's a bit clear, thanks.
Okay. That can, yeah, it's a second bus. Me, it's a second bus. Someone who wanted can even go up to M5 like me and then kill this thing. After all, you've already seen price action here. Yeah. The lower the time frame, the better. Me, I'm going to take a risk and wait. If it comes here and I see any price action here, yeah, I'm going to enter a lot. Like, really going to enter that trade. We have 4 minutes. Let me look at the CHF really quickly. So for CHF, we know that CHF is actually, this is a morning star. I don't know whether you guys see that. Do you guys see that this is a morning star? It's a reversal candlestick pattern. So just to keep it short, CHF is going up. USD CHF is probably going up for the next couple of days. Let me look at this on the weekly. Yeah. So if I'm to drop a kill shot here, we have a few minutes for. If I'm to drop a kill shot here, I could give it an excuse and say, okay, fine, this is my kill shot level. Around price at 0.94. Price could still come and touch it, then goes back up. That's what I would wait for. As simple as that. I wouldn't really want to take any more risk like here and there. I take all my trades either at a Fibonacci level, which is also a kill shot level, or I don't. Me, I don't take any trades in the middle. I don't believe in, okay, I first wait for, momentum and all that stuff. Me, I don't do that. That is good for someone who's going to manage their risk. But me, I don't. And I don't advise you to be like me. So you really have to worry about yourself. So you can see you have already a bullish engulfing here. This is an inside. You have so many price actions here. This is a bullish inside bar. Okay. This is a bullish engulfing. What else do you want? Boom. It's going up. This one, it's going up. But if you wish to get an entry, like I always tell you, some people now they've missed entries. You're going to have to wait for this pair to create a significant high. Let's say this pair comes up here and and creates a high, like let's say around this level. What I'm going to do now is I'm going to drop my Fibonacci from this low if I want to take the trade, I'm going to drop my Fibonacci from this level to that level. Then I wait for price to come back and drop to a Fib level. Now I look at a Fib level which has wicks. So in this case, I have this wicks, I have this wick. So of course, I'm going to be considering this Fib level. I'm not going to stress myself buying so that it goes against. I'll first leave it to calm down. Yeah, I buy from here. That's where my buy limit would be. Stop loss would be below 78.6. So for USD CHF, it's still bullish. If there's anything anyone has not understood, please ask me so that I can look through them. Because the next call link I'm going to give you, we're going to be repeating just a few more pairs, and then we call it a weekend. So you guys, I'm going to be waiting for your questions. Or maybe we shall redo this USD CHF again. And then we can see what happens. So